Is it inflation or just your imagination? Is the economic data even making sense or even useful at this point? Ultimately, what the Fed chairman sees in the economic tea leaves, or their morning oatmeal for that matter, is not within your control. However, protection of your retirement savings is in your control. This should be motivated by knowledge and confidence, not fear. If you think you may be falling behind in your financial goals, see the video description to access the free Inflation Retirement Calculator to make sure that you are on track. To discuss the present economic environment and how investments in scarce and time-tested assets like gold and silver can help you secure your financial future, we will hear from macro analyst and investor Lyn Alden, political author Dominic Frisby, economist, White House advisor, and author Jim Rickards, economist and investor Keith Weiner, and former U.S. Congressman and author Ron Paul.
I was motivated by the breakdown of the gold standard in 1971. If anybody remembers the 70s, we had interest rates at 21%, inflation rate of 15%, and I thought the monetary issue was important because it is the monetary debasement that allows governments, federal governments, to spend more money than they have, and they print it. Then they can have a welfare warfare state and no responsibility. I am always delighted when so many young people are interested in this issue because many young people will be inheriting this problem and trying to sort it out. Believe me, the gold standard was invented a long, long time ago, from the beginning of recorded history. 5,000 years ago, they used gold and silver. Biblically, gold and silver, real weights and measures, that's what they counted by. So this is not brand new. It's the governments and the people who seek power are always undermining the restraints placed on governments by honest money. It's so unfair not to have a standard of value. By not having this standard of value, which is so important, is sort of trying to build a building with a ruler that's always changing value.
Gold has been doing what it does for 5,000 years, and the proposition is that it's going to continue doing for the next 100 years what it's been doing for 5,000 years. Austrian economics teaches us that as the quantity of a commodity increases, its utility or value at the margin decreases. Gold is not consumed, and it's been continuously mined, so far as we know, for at least 5,000 years. And in those 5,000 years, we have not reached the point where marginal benefit is less than marginal cost. We continue to accumulate more of it without any apparent limit. And what this is saying is that at the margin, gold's utility is not diminishing. The nth plus 1 ounce has the same value as the nth ounce, which is saying that gold is the closest thing we have to an economic constant. Now, why is it important to have something that's an economic constant? If you look at the firm, if you look at the enterprise, what is the single most important thing that every business owner, operator, manager needs to know? Are we creating wealth? Are we destroying wealth? And how do we measure that? You need something that will give you an objective picture, and gold is that objective picture. I don't think there's any real debate as to whether gold continues to be for the next 100 years what it's been for the last 5,000 years. The only real questions are, one, when does the dollar collapse?
In this environment where money's weak, we monetize other things. And so rather than investment being an optional thing that we engage in, it becomes a pretty necessary thing that we engage in. And so that can include obviously equities, it can include real estate, it can include just scarce things like gold or land, stuff like that. People have to hold their assets and other things, at least as long as we live in this world of constant currency debasement. You want to hold scarce things, and you want to hold things where it's your share of that thing is not getting diluted very rapidly.
Just a quick interruption to say thank you for supporting our channel. Please like and subscribe if you enjoy this video content. It really does make a difference. Also, a quick mention and shout out to one of our sponsors, Augusta Precious Metals. With over a decade in the industry, Augusta Precious Metals is one of the leading gold investing companies for trust, customer empowerment, and prices. The company provides 401k rollover services to tax-advantaged gold IRAs, as well as a unique gold investing educational webinar and resources for their customers, helping beginning and experienced investors protect their retirement wealth with confidence. Whether you are starting a brand new gold IRA or rolling over an existing account, the company will make this process seamless and stress-free. To find out more about Augusta Precious Metals, see the link in the video description to visit Augusta Precious Metals' official site to receive a free gold investing guide. Also, check out our video review of Augusta Precious Metals by clicking the link in the top right. Now, back to the episode.
Now this, I think, is the most telling chart in the whole world, and it comes from our man, Our World in Data. But if you look at that chart, you will see the price of goods and services was pretty constant for 350 years. And it's only since the 20th century where the price of things has suddenly gone bananas. And if you look at this chart shows it more clearly. It's a logarithmic chart. This chart shows consumer prices in previous centuries. So there's the 20th century where the price of everything has gone nuts. But now we're going to look, this is the 18th century. Look at the prices of things in 1816, that was the great recoinage. And by 1900, they were much lower. Stuff got cheaper all the way through the 19th century because money was sound and it couldn't be debased and printed. But that's an incredibly telling statistic, and if you want to understand the inequality gap, those are your two charts. Now, money, of course, then was gold.
Currency wars arise in a situation when there's too much debt and not enough growth. Notice, how do you handle debt? Well, there are kind of three ways out. You can grow, you can actually grow and make enough money to pay the debt. You can default, not pay the debt, or you can inflate it, which is just a disguised form of default. So I inflate my currency. Here's that $1 billion I owe you. Good luck buying a loaf of bread because it's not worth very much. So growth, default, and inflation are the three ways out of debt. Well, there's no reason to default. I mean, why would you? If you can print the money, why would you default? Just print the money. So we end up with inflation as the answer. Fine, I can't control the world, but I can control my own portfolio. And converting central bank money, which goes by the name of dollars or euros, into gold is a way, in my view, to preserve wealth. As far as a gold standard is concerned, there's not a central bank in the world that wants a gold standard. You can be certain of that. My question is, are you at some point forced to go to a gold standard, not because you want to, but because you have to restore confidence in some kind of, collapse of confidence or systemic crisis, probably much worse than we saw in 2008? And the answer is you might have to do it just to put a lid on things if you don't reform the international monetary system sooner. So we're stuck in this weak growth cycle. We're seeing lost confidence in central bank money, and that's part of what's driving the price of gold higher.
With a 5,000-year record that has withstood every economic business cycle, stock market booms and busts, global conflicts, and outlasting every faith-based fiat currency, gold is no one's liability. It builds wealth while preserving it. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, transparency, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring all these investing principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the link in the video description to access the free gold investment guides. If you have $100K of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.